My name is Rosenthal, and today I'm going to talk to you about the Public Company Accounting Oversight Board changing and adjusting their procedures for auditors when looking at accounting estimates and the use of the work of specialists during an audit. So they did this around December 27th, 2018, and when they concluded, the chairman of the board, William Dunk, issued a statement that said the board's actions today comes after thoughtful analysis and extensive external engagement on the prevalent use of accounting estimates and the auditor's use of the work of specialists, recognizing that these are both challenging parts of an audit and needed to be addressed. So the first side of this is looking at those accounting estimates, and with that comes fair value measurements. So Accounting Standard 2501 looks at these areas, and it replaced three different standards with one single standard that emphasizes the auditor's responsibility to apply professional skepticism when looking at these estimates. And it really required them to address management bias. So any reason that managers could be biased or try to get around loopholes because it is an estimate and make them and their company look better on their financial statements. And it provides a more specific direction and integrates the PCAOB's risk assessment standards to focus auditors on estimates that have a higher and larger risk of material misstatement. So really what the auditors are going to be doing is they're going to have to look at the company's estimates and evaluate their numbers and formulas and see why they used it and how they used it, and ask those and approach it with professional skepticism, ask those tough questions. And in addition to that, the auditors are going to create their own estimate, do it the way they think it should be done, and create their own estimate, and then compare it to the companies, and so that they can better ask those questions and better find discrepancies in their estimate. And they're also going to evaluate the events and transactions after the measurement date of the estimate. And so looking at these and making sure they're properly recorded and how they change the estimate will decrease the likelihood for material misstatement. Now, the other side of this coin is looking at the use of specialists. And there's been an increase in that because when an auditing team needs expertise in an area, they can bring in a specialist, and that's all well and good. But there hasn't been a high regulation on the work of these specialists and how to use it, and so a lot of times you're just taking their work and using it. But the PCAOB is really hammering home and adjusting these standards so that the auditors have to look at it as a supervisor and evaluate their work consistently, and this will drastically decrease the risk for material misstatement. And if you're like me, you're kind of wondering and asking yourself, now, why did these two happen at once? Why did the PCAOB board meet and discuss these two things and adjust their standards accordingly? Well, it's because a lot of time using these estimates, because they are so subjective and hard to test and evaluate, they're bringing in supervisors and to bring in their expertise, but there wasn't really a good regulation and evaluation of these supervisors. So now increasing how the auditors themselves look at estimates and how they're evaluating those supervisors in estimates and whatever area you're looking at is going to really decrease this risk of material misstatement and make it a more thorough and accurate audit. So when the SEC approves this, it's going to take into effect on December 15th, 2020, and all the companies that have a fiscal year end of then or after, the auditors of those companies are going to have to take into account these standards. So let's say as an auditor, we have a company with a year end of 12/31/2020. Well, busy season 2021 comes around, we're going to be using these standards. And so there's a lot of pros and cons that come with these. Mainly the cons are that it's time consuming. It's gonna be increase in workload and difficulty, and it's gonna be an increase in effort. It's gonna take more time, and it's gonna be annoying at times. But the pros outweigh the cons. It gives us more direction on a probably really subjective matter in those estimates. And it was always hard to really do those, and it creates a more accurate and thorough audit, and it's gonna better the audit as a whole and make it decrease the risk for material misstatement. And so those pros really outweigh the fact that it's going to increase the workload and become more time consuming. And this last page is my sources, and I use pcob.org and EY. I had a lot of summaries and examples of this, and the Journal of Accountancy. And so now I'm opening up for questions. If anyone has any questions or comments they want to give me, I'm all yours. Thank you.